Krishi Fagwani joins us, CEO and founder of Thrive. And why are we discussing? Well, Coca-Cola has picked up stake in Thrive, and now Thrive has got two investors, Jubilant Foodworks and Coca-Cola. Okay, first let's understand that you got two large investors, Coke, a global MNC, Jubilant Group, a big corporate group. How will life change for you?
So first and foremost, thanks a lot for having me here today. It's an absolute pleasure to be here. To answer your question, to be honest, both entities in itself are massive entities, right? And they bring in advantages for a company like us in a lot of different areas and kind of complement each other. So for a company like us at the current scale that we're at, it gives us a lot of confidence to actually go out to the market, to think more long term, and to have the confidence to have the ability to actually go out and uh, make big moves in the market and gain a lot of market share. So it is a very, very positive sentiment for us. It's positive for the industry because it's two of the biggest companies in their own areas. There's a lot that we end up learning in terms of direct ordering and delivery from the team at Jubilant Foods, who are one of the pioneers in that space. And we're really excited to learn more about consumers and consumer growth and other areas like that from the Coca-Cola team in India.
The food delivery business is a tough business in India. It's a business where you got two large players, Swiggy and Zomato. They both have become global brands because of their ability to raise capital by P investors and their ability to perhaps stay in the business despite a burn of about $3 to $5 billion. Now that you've got Coke on board, would you be looking at serious amount of growth? Are you aiming to occupy that third player spot in the food delivery market in India?
Absolutely. I think what would help here is some context in terms of our journey to kind of help you get some better clarity in terms of where we're headed, right? Our story actually began in 2016 when we initially launched #, which was essentially a marketing product that was built up to empower small and medium businesses so that they could compete, so that we could level the playing field with the enterprise counterparts that they had in this space, right? Over the years, we started off with a simple loyalty platform, scale it up to a complete marketing suite, so that brands could leverage customer data in different ways and engage with the customers and bring them back in. In the pandemic, we actually hit a brick wall because everything kind of shut shop, right? And we were very dependent on people actually going out to restaurants, to salons, and things like that to collect customer data, and that's what powered our CRM, right? And that gave us an opportunity. We went back to the drawing board. We essentially spoke to a lot of our customers. I think almost 80% of our customers were in the food and beverage space. So we had a very, very clear understanding about the market, about their operations, and what they wanted, right, and their pain points. So we realized there's a big opportunity here, and hence we ended up launching Thrive Direct in 2020 in the midst of the pandemic. When we brought on Jubilant Foods, the idea was very simple. We today compete in a space with a bunch of different large brands, right? There's Zomato and Swiggy on one side. There are other companies like Dotpay on the other side with Direct. And all of these are very heavily funded, heavily backed companies. You were absolutely spot on with respect to the question that you posed about these companies going out and spending billions of dollars on customer acquisition and on getting to where they are today. But to be honest, that was required. If you look at the market 5 years back or 7 years back, food delivery in India was pretty much non-existent. I think both Zomato and Swiggy have done a fantastic job in setting up the base foundation for this entire delivery ecosystem. And they've got it to a point where food delivery and ordering is essentially a commodity today. Now, the primary reason that we brought on two large investors like JFL and Coca-Cola, right, is to essentially, we realize that we can't compete with the likes of Zomato and Swiggy when it comes to capital because we don't have that much. on hand. But what we can do is we can leverage partners, we can leverage their expertise, and we can grow together uh, as an ecosystem to kind of try and achieve that success faster. And that's essentially what we're going after.
Be your immediate priority? Will it be growth at any cost? Burn karo, because now we got Coke and Jubilant, or you would say I will be small but I would be profitable?
So, see, to be honest, we've had a long and a very long journey so far. We've been in this space for almost, I think, 8 years now, with hashtag loyalty and then with Thrive. I don't think any of us are follow the mindset that we need to grow at all costs. We're looking to grow in a very, very quick and positive manner, but there will have to be clear focus on unit economics, on profitability at some point in time, so that we can find that right balance. We will pick up we'll pick up growth market by market as we're comfortable. With our direct business today, we are working with almost, I think, 14,000 restaurants pan India. And that business is scaling up very, very well with a bunch of large brands signing up as well every single day, right? And the consumer business is only live in Mumbai today. So we'll take it as it comes. And as soon as we feel like it's the right time to hit the pedal, we will do that.
Right. Yeah. Krishi, the other thing I wanted to understand is what have been your early interactions with Coca-Cola about? What's the feedback coming from them? And the other thing, the fact that the commission that you charge from restaurants is as small as 3%. Have they pushed at all to, make it a little bit higher as some of the other platforms do? I'm just wondering what the conversations with them have been about.
No, absolutely. So, Coca-Cola is something that's actually not happened overnight. We've been in conversation with them, I think, since maybe October 2021. So that's probably a month prior to us closing with Jubilant Foods. I think the initial conversations with Coca-Cola were more focused on a commercial partnership, where we could find ways to kind of grow Coke consumption per se, like they do with other partners like Zomato and Swiggy. But I think over time, I think the team, the more time we spent together as two teams, we realized that we shared a very similar vision for the ecosystem. And we believe that there was a lot that we could achieve together as teams if we work together. Now, keeping that in mind, I think broadly with Coke, our focus areas are going to be very, very simple. Coca-Cola has a massive distribution pan India today in the restaurant ecosystem. I think their direct reach is around 700,000 restaurants pan India. Our primary objective is to essentially leverage this distribution to tap into and access a lot of these restaurant partners and kind of expand a lot quicker. Similarly, they have a lot of marketing assets on the consumer side that we plan to leverage for consumer outreach and to kind of scale up on that side as well. In terms of what we plan to do with Coke, to be honest, there is nothing specific that we plan to do with them that is specific to Coca-Cola. I think the core objective for us is to work together to drive higher attach rates for beverage sales in India for food delivery. The attach rate in India today for beverage sales is roughly 3%. In a lot of global markets is as high as 40%. If you look at a McDonald's alone, globally, at an overall level, it's almost 80% in terms of attach rate. So there's a lot of room for growth there, not just for Coke products, but for the entire beverage industry as a whole. And that is what we're looking to impact and change along with Coca-Cola.
That, Krishi, but I've ordered from your platform and it's a great experience. But point of the matter being that considering you charge restaurants this low as just 3%, so I understand why they wouldn't want to migrate to the Thrive platform. But with marquee investors now in, would you be able to keep your commissions as low or not?
Absolutely. So there are actually two parts of our business today. There's Thrive Direct and then there's consumer platform. Thrive Direct is what we started off with in the pandemic. That is essentially where we work with 14,000 restaurants pan India today. The commission structure for that product is a flat 3% commission, and we charge a payment gateway charge on top of that. Now, bear in mind that the reason we are able to keep the commission structure so low is that for Thrive Direct, a restaurant is uh, completely responsible for generating their own demand. So there is no cost of acquisition, there's no marketing cost, there is no discount cost that we incur as a business, and hence we're okay and we're able to kind of keep that. We're simply providing them with the right infrastructure to set up their own online store, and then with the right resources to actually go and fulfill their orders in a very efficient manner. Correct. On the consumer side, which is a consumer platform that we very recently launched, and this is only live in Mumbai today. It's currently in beta. We plan to take it out of beta maybe in June 2023. The commission structure is slightly higher. We're charging between 10 to 14% commission for all orders generated on the consumer platform. And the primary reason for that is because we are taking responsibility and ownership for customer support, for delivery, and for a lot of things like that. And hence, we felt that keeping in mind that we are helping a business with acquisition, it was just and fair to charge this fee per se. One thing to add here is that unlike our peers in the space, we've actually segregated the commission structure for new customers and repeat customers. If a customer is ordering first time from your restaurant, you pay a charge of 14%. However, if they come back to your store within a certain period in time, we actually charge a lower percentage. So this helps segregate consumers based on how often they're coming in, and also gives the restaurant that benefit when people are ordering again and again from the same store.
Good to know. Thanks very much, Krishi, for taking time out and joining in, giving us a view on the big deal that took place, as well as how Thrive stands in the entire food delivery market. All right, just a